The market has officially closed for the week, and as of the closing bell on Friday, July 10, 2026 at 4 p.m. Eastern Time, NUBURU, Inc., trading under the ticker symbol BURU on the NYSE American, finished the trading session at a precise price of 14 cents per share. This represents a modest intraday increase of nearly 7% compared to the prior session, with significant trading volume spiking past 17 million shares, moving through individual brokerage platforms. While a penny stock bounce of this percentage might look like a sudden recovery on the surface, the underlying data reveals something far more complex. The unexpected twist that most retail traders on popular retail platforms like the Robinhood app are completely missing is that this tiny firm is currently attempting to fundamentally restructure its entire financial identity by trying to acquire 70% of an Italian defense firm called Tekne. This move isn't just about expanding their sales pipeline. It is a direct, calculated survival strategy to radically lift their total shareholder equity and avoid getting aggressively delisted by the NYSE American exchange, which recently flagged them for falling below minimum asset requirements. When you hear about a company trading at 14 cents, the natural reaction for the average person engaging in online investing is to assume the business is practically a ghost ship, just waiting for the final liquidation papers to be filed. Investors look at the terrifying drop from its 52-week high of $4.24 down to its recent multi-year low of 11 cents and think there is absolutely no substance left here. The general consensus across public chat rooms and basic investing sites is that NUBURU is a dying microcap stock with no institutional support and zero commercial traction. However, the contrarian reality challenging this viewpoint is that the company has quietly positioned itself at the cutting edge of counter-drone military defense technology, recently executing successful tactical laser testing in Europe, which achieved complete visual suppression of unmanned aerial sensor systems. While the market treats this purely as a speculative shell, specialized defense contractors and sharp asset managers using high-end institutional portals like the Interactive Brokers platform are watching the company's attempts to clear complex foreign regulatory hurdles, specifically the critical Italian Golden Power government authorization required to finalize their massive corporate acquisition. To truly understand what is driving the wild daily swings and heavy trading volumes we are seeing this week, we have to look closely at the sudden burst of corporate communication hitting the market. Just days ago, management issued a highly detailed update revealing that they have already injected over 17 million euros of shareholder financing directly into their overseas partner to secure a path toward dominating a projected multi-hundred million dollar defense revenue stream over the next 4 years. This rapid allocation of capital explains why retail trading volumes suddenly exploded, pushing millions of shares through standard self-investing accounts and active trading tools. Speculators are betting that if this international government approval goes through, NUBURU will instantaneously absorb a massive balance sheet, expanding its total asset base up to $76 million and lifting its public equity well past the exchange compliance thresholds. For a stock sitting in the microcap basement, a massive balance sheet adjustment like this creates an intense tug-of-war between short sellers who expect a total bankruptcy and aggressive retail buyers who see an asymmetric upside opportunity. At the same time, the massive macroeconomic pressures of high interest rates and tight credit terms are making it incredibly expensive for microcap technology companies to survive without regular dilution. If you look at the fundamental financial health of the business using professional tracking applications or deep analysis portals like Schwab Intelligent Portfolios, the structural stress becomes blindingly obvious. The company's net income losses have historically been severe, burning millions of dollars in operating cash flow quarter after quarter, while relying almost entirely on complex financing arrangements and issuing new equity to keep the lights on in their research labs. This constant need for external funding is exactly why the stock plummeted more than 90% over the last 12 months, leaving early backers completely underwater. When a firm has to constantly balance the cost of advanced physics research against the strict listing rules of public stock exchanges, any delay in commercializing their designs results in devastating equity degradation that ruins long-term portfolios. Comment below how many shares of NUBURU you currently hold, or if you are entirely avoiding the microcap defense sector right now. Looking at the broader industrial sector, the absolute explosion in global demand for effective counter-unmanned aerial systems has completely reframed how microcap hardware companies are evaluated by aggressive risk-takers. The traditional playbook for small-scale technology developers was to slowly pitch their concepts to commercial manufacturing conglomerates, hoping for a licensing agreement or a modest supply chain contract. But today, the urgent military necessity of finding affordable, non-kinetic options to disable hostile surveillance drones has bypassed the traditional corporate adoption cycle entirely. NUBURU's proprietary design relies on high-power blue laser systems, which offer significantly better energy absorption profiles in metals and reflective materials compared to traditional infrared wavelengths. This distinct technical edge allows their hardware to melt structural components or instantly blind the optical tracking packages of incoming airborne threats at tactical distances using far less power than legacy systems. It is this specific intellectual property that keeps speculative interest alive across major digital systems, from specialized fidelity investments tools to basic consumer platforms. To put this technological reality into historical context, we should look at how the company actually operates and how it reached this highly volatile position on the public markets. Founded as a specialized developer of high-power industrial blue lasers, the company initially targeted the high-volume manufacturing sectors, focusing heavily on precision copper welding for electric vehicle batteries, consumer electronics assembly, and advanced aerospace manufacturing. Their core business model was built around selling expensive, high-margin laser engines to industrial integrators who would mount the hardware onto automated factory assembly lines. However, setting up massive global sales channels requires an enormous amount of upfront capital and years of enterprise testing, a luxury that a young, cash-strapped public entity simply could not afford while navigating a brutal bear market for speculative tech. Realizing that the corporate industrial ramp-up was moving far too slowly to outrun their corporate burn rate, management pivotally shifted their entire strategic focus towards dual-use defense and security applications, leading directly to their current complex corporate structure and the high-stakes European acquisition. When you contrast the market's current dark expectations with the unfolding operational reality, the near-term future of this stock boils down to a few binary catalysts that will either wipe out common shareholders or ignite a massive upward repricing. The most immediate variable is the upcoming decision from the Italian Council of Ministers regarding the Golden Power Review, a regulatory mechanism designed to protect strategic national assets from foreign control. If the European regulators approve the transaction, NUBURU will successfully consolidate a revenue-generating asset with an established defense manufacturing infrastructure, giving them the immediate scale needed to satisfy exchange requirements and fulfill massive international defense contracts. Conversely, if the foreign government blocks the deal over national security concerns, NUBURU will be left with a severely depleted cash position, a massive amount of unrecoverable overseas financing, and an immediate threat of being forced off the main exchanges onto the over-the-counter markets, where institutional capital completely disappears. Evaluating the absolute best path forward for an individual managing their own capital requires looking past the daily percentage pops and focusing on the raw structural mechanics of microcap investing. For those utilizing comprehensive automated tools like an intelligent portfolio or a diversified active trading account on Interactive Brokers, highly volatile micro-cap penny stocks under 20 cents rarely fit into a disciplined wealth management strategy due to the extreme risk of total capital loss. The massive trading volumes we are seeing are driven primarily by short-term momentum algorithms and speculative retail traders looking for quick microcent swings, rather than institutional accumulation by stable pension funds or long-term exchange-traded funds. Navigating a corporate restructuring of this magnitude requires an immense amount of patience and a clear realization that the gap between what the market expects and what the financial statements actually show is wider than ever. In closing, the central conflict defining NUBURU revolves around a dramatic collision between a severely